Oh, good evening, everyone. Please, can you hear me?
Yes, sir, we can hear you.
Yes, sir. Good evening, sir.
Good evening. Good evening.
Good evening, sir.
Good evening, everyone. Nice to hear from you guys again today. Even though I'd like to apologize, so let me apologize. I think I promised you guys to see you either Saturday or Wednesday. I think that was on Friday. I think that was a promise because I know that a couple of people called me and reached out to me concerning my promise. First of all, I wanted to do the class, but it was when I noticed, because I thought the revision class was going to start today. It was when I saw the timetable for the revision class and I saw it was not starting today. So I just thought, okay, don't let me stress my weekend. Let me just come here on Monday and have this class with you. So that's why the class for the weekend, you know. And today's class, it's God's grace that allowed that allowed us to be here. It's because I've promised you guys to be here, and I don't know, I don't really know how to cancel. So I just had to come. So that's that for that. That's number two. Number three. Today's going to be our last class. I'm sure you guys know already. So today's going to be our last class. That's for people that know that is not attending the revision class, anyways. But for the revision class, yes, you're going to see me there. So that's that for that. Also, what else do I want to say? I forgot to know. Anyways, basically all. Now let me say something before I continue or before I go on. Let me share my screen so you guys can see something. Normally, in our last class, I said something. I said that I'm not going to try to convince anybody to come for the revision class. It's not my money. It's for the institute. It's not as if it was entering my pocket. I don't beg money like this, but it's not my money. It's nothing. It's just for why am I saying this? I'm saying this because while I was setting the revision questions, I saw some questions that some of you might have seen either in past question or in textbooks, and that you will legit struggle with. I'm not even trying to impress anybody. Those are questions that you see, and if you are seeing them for the first time, even the simple ones, you get confused. Because majorly, because of the time schedule of the class, we could not really attempt or do most of these questions very well. Example, forecasting. We could not really go deep into forecasting. We could not really link bond valuation to mergers and mergers and acquisition sometimes, or to investment appraisal. Example, imagine they give you a question for investment appraisal. Most of you always expect that they give you the cost of debt. Abi, that's most of the ones that you guys are familiar with, where they just actively give you the cost of debt. Then scenario where they don't give you cost of debt, they give you information for bond valuation. Like I've said before, ICANN is advancing. Now, what they are doing more is interwovenness. Most times they test those questions, all of them, but they just look for a way to link it together. So either you don't know bond valuation, there is no way on earth that you're getting that cost of debt correctly because you don't know bond valuation. Last night they brought out a question, option pricing. It was in mergers and acquisition. If you don't know option pricing, you will not get majority of the mark of those questions. Now, so they're looking for ways to merge these things together. So while looking through textbooks, ACC, PAC, and I can pass questions. I just noticed some questions that now, if students see this for the first time, there's no way you are passing. I'm not even joking. Or you've never solved a structure like that. So that's what I'm going to say. Okay, let me just show you. So I'm still working on if you can see, I'm still working on question. You see, I've not this question 7. I think I planned 15 or 20 questions just to solve. So I'm just saying, I'm not trying to, like I said, I'm not trying to impress anybody. I'm just saying that me personally, from my own end, I'm trying to get my job done by letting you guys get the best knowledge and me having confidence that my students that are going to the exam hall, they are going to come out and they are going to pass. Yes, like this, my confidence is still high, but it's still on the 55, 60. But if there was a general revision or something here, I could have cheated or touched most questions, then increase my confidence to 80. So please, let's try as much as possible to be there, so that we can charge some things out and we can solve some questions, please. I'm already seeing a lot of numbers in the revision class, and I already spoke to Mr. Kabiru that Generally, I don't want a large class. I'm sorry, but I don't want a large class. Nah, I don't generally want a large class. I want a class that I can talk to people that will understand, not quantity now. It's just small numbers that can give me quality that I'm looking for. So please, so we spoke yesterday and I told him if it's possible to reduce the numbers, I would be glad. I would be glad. For people that have paid, Otilon here, it's just people that have not paid that. I don't know. I'm just saying. Anyways, that's that about that. Now let's get to the business of let's get to the business of today. It's like people have taken off, Abby. Mr. Chika, people have taken off. Look that my class is full today. Everybody has taken off. Exam pressure is already here. Because this class is full. Oh. Now don't they feel People are already feeling the heat.
It's getting worse.
Now, wow. Please qualify this diet. Oh. They said from next diet, if you don't finish, if you don't do charter induction, you still gonna write ethics exam. People are saying shiggy. You still gonna write ethics exam. Please qualify this diet. I beg. Let all these things pass away. Anyways, enough of our gisting. I think we can start. I don't plan to stay very, very long into this class. I quite have a lot to do. So I don't plan to stay very, very long in the class. So let's just run through what we have to do here today. Anyways, we started with our what's the name? We've done our mergers and acquisition, our investment appraisal. We've spoken about all of them. We've spoken about the income-based method where we used the asset-based, the dividend, the price earnings, and we've spoken about the one where we used our net assets. There's only one we've not spoken about. What's that one? The free cash flow. The free cash flow is the only one we've not actually spoken about. So that is one of the reasons why I'm here today, so that we'll do the free cash flow. So I think there's a last question in that question bank. So we'll do that, and from there, I think I can call it a diet. From there, I can call it a diet. Anyways, like you guys know, before I start, I think we have an unfinished business. Regarding there was one question we solved in the last class that had the inventory overvaluation, undervaluation, and blah blah blah. So some of you guys requested that I check it out and I look for a proper way to, or a simpler way to explain it. I'm not going to lie to you guys, I did not. I actually did not. Because I did not want to. Believe me, it totally skipped my mind. There's actually a lot of things going on right now. Like I've told you guys before, I was not preparing for this revision. It came out of the blues. I was just planning for my one-day revision. JJ, do my revision, let me go and face my pending stuff that I've left since. I was supposed to use all those Easter holidays to cover for a lot, but classes and all those things, I couldn't. So I was planning to go, but when the revision came, I cannot say no to you people. So I actually did not look at it. But let's try it again. Let's see if it sticks better now. Let's try it again. So I think first of all, before I do the inventory valuation or overvaluation thing, please can you guys hear me?
Yes, sir.
Yes, sir. I hear you.
Okay, thank you. So before I do the inventory valuation or overvaluation thing, now I think I noticed something in that question generally again. So please, for people that were in class last week that had the working notes, please, I think the what's the name? The inventory was correct, the depreciation was correct, but I think the director's enumeration, you guys know we spoke about it now. The director's enumeration. So after looking at the question again and really looking at it, I think we subtracted it, Abby, didn't we?
Yes,
let me check.
we
Subtracted it here. So please, the director's enumeration was it was particularly overstated. As it was overstated, it means your profit has been understated. And if your profit has been understated, you need to add it back so that to get the profit. I think that was that not the one we did the first time? I think that was what we did the first time.
That was what we did the first time, that we have 11,000 something.
Okay. Yes. So please let's leave it like that. Please, I think that's correct. So I think I had a look at it again this evening. One of you called me. I don't know if the woman is here. She called me for the question and maybe she was trying to solve. She was one that actually reminded me because believe me, I would have forgotten. I would have just come here. I wanted to use 1 hour in this class. I wanted to just come here and do free cash flow and go. But she called me this evening. I think I was trying to solve the question. Then my mind just sprung. So I'm like, okay, maybe I'll talk about it in class again to see if it makes sense. So please, that one that we did the first time, I think is better. I think it's more correct. Now, let me now explain everything to you guys from the beginning. I just hope it's clear at this time. Now, inventory overvaluation, inventory overvalued, inventory overstatement. It can be anything. Now, this is the scenario. You know that our cost of sales, listen, oh, you know that our cost of sales is our opening inventory plus purchases less our closing inventory. That's what makes up our cost of sales. Please, if you are streaming on YouTube, I think I have 5 spaces in class. If you are interested, you can join. So as I was saying, my cost of sales is comprising of my opening inventory plus my purchases minus my closing inventory. Good. Now, what happens now if your opening inventory, you know that thing was created in 2009, and in 2009 it served as our opening inventory, not a closing inventory. Those are the two places that it could get mixed up. Those are the two places it could get mixed up. The mistake was in 2008, but it served as an opening inventory in 2009. And normally in any scenario, if your opening inventory is too high, like let's say your opening inventory was supposed to be 20,000, it's now 40,000. It will be too high. That means your cost of sales will also increase now. If your opening inventory has increased and it's too high, your cost of sales will also increase. And you know, you always less your cost of sales from your sales. So automatically means your profit will be low. Automatically means your profit will now be too low. So if the profit has been understated, you need to add it back. Because the profit was not supposed to be that low. But because of the mistake with the inventory that was overvalued, because the cost of sales was now too high. So once you let the sales from that high cost of sales, your profit will now be too low. And the profit is not supposed to be there. The profit is already understated. So you need to add it back for it to be what? For it to be correct. Now look at this scenario. Look at the profit or loss, the proper profit or loss. Look at it in your head. You have sales, then you have cost of sales. Your cost of sales comprises of your opening inventory plus your purchases less your closing inventory. They're not telling that the value of that opening inventory is supposed to be 20,000. They've now overvalued it. It's now 40,000. What they've done with that overvalue is that they have, that cost of sales, you subtract it from your sales now. So what they've done is they've reduced the value of the profit. Their profit has now been understated. So to correct that error, you need to add it back so that it's correct. I think that's a little clearer now. I think that's better. Now for depreciation. Depreciation normally in that particular question, it was already, how would I say it? It was already understated. Yes, now it was understated by 750. I think 750. Is it 750 or 700? I don't exactly remember. I think it's maybe 700. It was understated. 750. Thank you. So it was understated by 750. If it has been understated by 750, what it means is your profit has been overstated. But now look at it. The expenses that are supposed to be in the book. Listen, but the error that's supposed to be in the book is supposed to be like 3 million. That's what the expenses that are supposed to be 3 million. You know that the higher your expenses, the lower the lower your profit now. Yes, now the higher your expenses, the lower your profits. So what they've now done is they have now reduced their expenses. So their profit has now been overstated. And if that as you remove that value now, you subtract that 750 of depreciation from it so that it is now the correct profit will now be shown. That's why we reduce the, and I think the grammar on depreciation was actually even clear to some point. I think it was just that director's enumeration and the inventory overvaluation. I think I've explained that. So for depreciation, that's just the grammar and the whole thing that happened there. Now for the director's enumeration, listen, they have increased their salaries to reduce their profit. That's what they've done. That's the grammar. They have increased their salaries to reduce their profit. Now, what they should have been paid, I think it's about 1.8. That's what they should have been paid. But what they now paid themselves was about 3 million, something like that. So their pay has been overstated by some particular amount. I think 600, 1 million, like that. So it has been overstated by a particular amount. Now, since you have overstated your remuneration, it means that your profit has been understated. you have overstated your remuneration. It means that your profit now has been understated. You have increased your salary, so it means that your profit now has been reduced. It has been understated, and you need to add back that overstatement amount now, so that you get the exact profit. You need to add back the exact amount. See, this add back and subtract is always a lot. It's always a lot. People are even very lucky that it's 2 or 3 in this particular question. The question was about 6 or 7. I don't know. I always just tell my students, thank God there's no negative marking. The one that you can think about and you can picture in your head, just do it. But what I always tell them is just always look at. Mr. Mommy, please help me with your video. Just always think about the proper profit or loss in your head. If possible, open the back of your question paper or something. Draw a normal profit or loss there. Like with salaries, just do it. They then be putting the effect so that you'll be seeing what is happening. If you have the time, anyways, so that you will be seeing what is happening at the end, so that you can always picture what is exactly happening. Before I take any question, let me now explain something. Now I told you guys that there's always a mistake, or there's always, how would I say it? There's always when it's opening inventory and when it's closing inventory. Now, so what I would do is let me explain to you when opening inventory is overvalued, when opening inventory is undervalued, and when closing inventory is overvalued and when it's undervalued. I think if you know those, or if it's to cram it, you cram it. So if you see anyone that looks like that, I think it's always inventory that is a little bit too much. So that's what I would just do. I'll just when opening inventory is overvalued and undervalued, when closing inventory. So I think you can always navigate yourself from there. Now, let me start from when opening inventory is overvalued. If your opening inventory is overvalued, it's just like the exact one that we did that time. So what happened when opening inventory is overvalued is that your cost of sales, like I told you, is already overstated. So an higher cost of sales, it means what? It means lower profit. That's the meaning. Higher cost of sales, it means what? It means lower profit. And lower profit, therefore, it means your profit has been understated now. So what you will now do is you add back that overstated amount, add it back to profit. You add it back to profit. That is what you do. You add it back to profit. So when your opening inventory is overstated, please add it back. Then when opening inventory is now understated, is the other way. Yes, it's the other way. Because if it's understated, it means cost of sales is actually understated too. Now it's just the other way. And lower cost of sales means what? It means higher profit. Therefore, your profit has now been what? It has been overstated. And if profit is overstated, you need to deduct the overstatement from the what? From the profit. That is just the other way of that. So if you know one, you can always know the other way. Let me go for closing inventory. So for closing inventory now, when closing inventory is overstated, it means what? It means, I'm talking about overstated closing inventory now. So when closing inventory is overstated, it means your cost of sales has been what? It means your cost of sales has been understated. What's happening here? Prosper Chimeremo. I don't know what you're trying to do, but you're presenting on my screen. Thank you. So, like I said, when your inventory is overstated, when your closing inventory is overstated, it means that your cost of sales is understated. And once your cost of sales is understated, lower cost of sales equals what? I said it earlier. It means higher profit. Higher profit means that your profit is what? Your profit is overstated. And if your profit is overstated, you remove it. Just know the effect of the cost of sales. I feel like if you know the effect on cost of sales, you'll be fine. Either if you know that your cost of sales will be understated or overstated, you always know that lower cost of sales means higher profit. Higher cost of sales means lower profit. Know the effect on cost of sales. I think you'll be fine. Closing inventory, overvalued closing inventory. It means an understated cost of sales. Understated cost of sales means what? It means higher profit. Higher profit means that profit has been overstated. It has been overstated. Go and remove it. So it's the other way. It's the other way also for undervalued closing inventory. So if closing inventory is understated, it means your cost of sales is what? Overstated. Higher cost of sales means lower profit. Therefore profit is understated. Then understated profit, it means what? You go and add it back. Like I said, my mouth is already paining me. You go and add it back. I've missed it, you know. How many minutes have I said? My mouth is already paining me. So you go and add it back. That is that. Miss Prosper, you are sharing your screen. What are you doing? You are sharing on my screen. Can you please stop clicking what you are clicking? So I hope with this 3 points of mine, I've been able to convince you and not to confuse you that That is all I can say about that. Please, do you have any question regarding that? No. Let's move on. Please, is it better than it was before? Is it clearer? I wouldn't see that, I will say.
Sir, are
Talk
you
to me,
sharing
talk to
your
me.
screen? I cannot see your printer.
There's nothing. All these things I'm not
I
seeing.
cannot see your screen.
It is not on my screen. Or there is nothing on my screen. That's why you're not seeing. I'm sharing my screen, but there's nothing there. Now from my head, I did talk out. I hope it's fine now. If you don't, you can just jot it down, go and cram it later. I'll go and do whatever you want. If you cram none. If it's cram, you want to cram it. So anyone that works for you. But I think I cannot do. I don't think I can do better than that. I'm not even lying. I don't think I can actually do better than that. So, anyways, please correct that thing we did in class, please. So change that director's remuneration. Please add it back. Don't subtract. I think we have 11,000. So I think that's supposed to be the correct answer, which is the first one. I think that's the first thing we did. I think that's the correct answer. So it means that Ms. Basira, please your mic. So I think it means that is there a part where they ask you to recommend, if there's a recommendation there, so it's something you will just tell them that if it's 11, they just tell them that okay, the price earnings ratio is not even something they should consider at all, because it gives a very, very low valuation of the business. It could be due to a lot of things. Do you know that PE ratio that gave us that thing? I think it was, that it could be as a result of them not even using their own PE ratio. Yes, now we have to use a proxy company now. So those are the kind of assumptions you make. That okay, it could be as a result of not using your own particular PE ratio. You using the proxy company's PE ratio, and you made adjustment, assume 80%, all those things could be a result of why their stuff. But the PE ratio means that they should not even attempt it for a method of valuation, because it gives a very, very low value for the company. Then the rest could be considered. I think the highest was dividend valuation. So you could recommend it. I cannot remember. I'm just saying. So if recommend dividend valuation for them. So, Ms. Chika, please ask me your question. Let me move on to what I have to do today.
Okay, good evening, sir. Thank you very much for that clarification. So in this case, we are removing inventory because it's overvalued. Then we are adding back our director's remuneration, right?
Yes, ma'am.
Then depreciation, are we adding back? Yes, we are adding back.
No, you are still subtracting depreciation.
We are still subtracting the depreciation. Okay, no problem. Thank you.
Oh, okay. So what I would want you guys to do for me regarding that question is, the question cannot come out exactly like that. So what I want you to do is sit down with it, try to paste all this my scenario to it, then just have your own understanding of it. That's the best way to go about it. Just have your own understanding of it. So if you see something like that, then you'll be very, very fine. Thank you very much. Now let me continue with what I have to do here today. Now, free cash. No, we don't have security now. Why are you on? So now, for free cash flow, I told you guys that we have two types of free cash flow. We have free cash flow to equity. We have what we call free cash flow to firm. Somebody asked me a question in my DM, in which I actually did not answer. If the man is here, I would suggest maybe you listen to me very well. So the question the person asked was, okay, we always speak about the fact that we have business risk and we have financial risk. How would I know if one is changing? I don't know if the man is here. I don't think I answered that question. It was that, how would I know if one is changing? That it does not want to gamble. How would I know if business is changing, if financial risk is changing? I'll tell you two things concerning that. Number one is that you don't particularly need to know when it is changing. Listen, and don't quote me wrong, please. You don't particularly need to know when it's changing and when it is not changing. Why? Because what they want you to do in the question will be stated to you. You know that all this is changing, is not changing. It's basically to know what you're trying to know, what to discount with. That's majorly the thing. APV, you discount differently with APV. If the businesses can financial, you discount it. One, you discount with WAP. So those are basically the reasons why you need to know when the business is changing and when the financial risk is not changing. But the question will tell you what to do. That's what I'm telling you. That is just a way of explanation for us so that you just know the differences. But the question will definitely tell you what to do. If it's APV you are doing, the question will tell you, okay, do APV. If it's free cash flow to equity, the question will tell you, do free cash flow to equity. If it's free cash flow to firm, question tells you, do free cash flow to firm. If it's investment appraisal, you do your investment appraisal normally. So you don't particularly need to know when it is changing. You don't particularly need to know when it is changing and when it is not changing. That's the first thing I will tell you. And the second thing I will tell you is, if you still insist on knowing when it will change and when it will not change, fine. Let me give you a great or a small trick on how to know. Now, if you look at the question, we have asset beta and equity beta. You know that asset beta measures what? It measures business risk, Abi. Equity beta measures your financial risk.
Financial risk.
If you look at the question thoroughly, and you are seeing two different, it's like two different companies now. Maybe one is trying to acquire one, or one is trying to use it, or one is trying to go into another investment or anything. In the structure of the question, if you see two different assets beta, if you see two different assets beta, it means that the business risk is changing. If you see two different asset betas in the question, it means that the business risk is changing. Some situations, they will not give you the asset beta at all. Or they can give you one. But if they give you two different asset betas, it means that their equity beta, so it means that their business risk is changing. If you also look down towards, then you're seeing that they have different structure, different financial structure. I mean, they have 60 to 40 equity ratio, 40 to clinical equity ratio. It also means that their financial risk is changing. As simple as that. As simple as that. Now, if you now don't want to go through that route, just try to learn what to discount with. Just try to know what you are trying to discount with. Now, let me come with an example. I've told you free cash flow to equity, discount with your what? Cost of equity. Free cash flow to firm, discount with your what? Your weighted average cost of capital. Your adjusted present value, you discount with your cost of equity. Your cost of equity that has the ungeared cost of equity now. You discount with your cost of equity. If you are doing your what's the name now? Your normal investment appraisal, the investment appraiser that is only investment appraiser that you might sometimes need to consider which that is changing and which that is not changing. But generally, most times you discount your investment appraiser also with your work. So it's that simple. It's just that simple. There's no rocket science to it. No rocket science. It's just basically concept. It's just concept and assumption. That is what is in this SFM. Just basic assumptions. If most of you have read your past questions or your Pathfinder to a very, very good point, for people that used to read solution, I'm sure you can understand what I'm trying to say here. If you check your solution sometimes, you see points where they tell you that Kenekon could also be assumed there. If you guys have checked it, they can give you a figure that this could also be assumed there. Or they tell you that alternative solution. They tell you that, okay, this method is also accepted. If you check your past question to a very good point, I'm sure you see those things. It's just full of assumption. That's why I told you that just try to understand the basic concept. Know what you are trying to do, and you are good. Just know what you are trying to do. That's all you need to know. What am I looking for? Where am I supposed to start from? Then just keep moving, then you'll be fine. You only need 50. Only if you won't collect account award, and it's 10,000, right? Only if they've increased it. So leave account award for people that have 50 or 51, so that if you don't get 50, in case if they say if you remove 2 marks from everybody, so that so you can get 52 or 53. That's all you need. Leave icon award first. Me like this, I'm not an icon awardee, and I did. And there are a lot of icon awarded too somewhere. So I'm just basically saying, so it's just 50 units. To just understand the bit and read your theories very well. This one that my class is full today. Let me shout it again. Read your theories. Oh, I've shouted, my mouth is already paining me. Read your theories. It's not just calculation. Let me press calculator. Read your theories. You guys said that they said no, I'm not saying. They said that ATS3. Their result came out. So they said they had 100% pass. I heard. So even if it's not true, they used to say there's no smoke without fire. But there's no fire without smoke. I don't know which one is which. But anyways, what it means is even if the 100% is not correct, they could have had maybe at 90 or 95, and everybody that I knew that wrote a TS3 passed, almost everybody. So what I'm now saying particularly is they changed their syllabus also, and they released the last set of students. It's just it makes sense because okay, let these people go. Let the fresh ones come and take this new change of syllabus. You get so they change our own syllabus too. So I'm sure they might want to release us. But if people know your people, you cannot get 30 and they say they let you go. You cannot get 20, you come and write it again. People that are getting say 40, maybe 40, 45, can just say okay, so I'll go, let my people go. You get so write something. Please, I wanted 1 hour, last 30 minutes to solve this my question. Please, do you have anything, any observation, any conclusion, any question from anybody, please? 2 minutes. Oh yeah. I'm seeing loads of new names here. I don't know how I want to take. I don't know where I want to start from, but anyway. Please, do you have any question, any observation, any reservation from anybody? Okay, so it means we are all on the same page. So if you are new here, you are listening to the sound of my voice for the first time, you're welcome. My name is Olan Shili Amangolawan. You can check me out anywhere. Anywhere you look for me, you see me there. you see me there. So, anyways, let's solve our free cash flow to our free cash flow question. Let's solve our free cash flow question. I think where's the question? It's not as if I'm trying to. I know you say my own is too much. That I'm encouraging you, and I'm not encouraging anybody. But I made sure I kept a whole lot of free cash flow to equity or free cash flow general questions on the revision question bank, just to let you guys have a great taste of it. Because I know that we did not really do it in class. So and I kept about 2 or 3 forecasting questions. I think I'm not done, sure. I'm still on it. So, anyways. Somebody told me something. I don't know if it's in this class. He used to tell me there is no amount too small to pay for knowledge. I hope is. I know you guys already paid for some centers, and you feel like I already paid for some centers. Why do I need to do this? I don't know. Yeah, we're just going to solve questions. I think I already told you guys before. We are just solving questions. So those questions that you found difficult in some of the pathfinders, I'll come and solve it here for you. Then you see the way it works, and I'm sure you have a good grasp of it. Anyways, enough of me talking about revision. So please, where's the question? Please, somebody with the question for me. I don't think I have the question anymore. But I think it's the last question in that question bank. I hope you guys can see my screen now for people that were complaining of not seeing my screen. Oh yeah.
Yes, we can.
Thank you. Please read question for me. I think it's the last question. Question 3 will be question. Okay then. Oh yeah.
Should I read?
If you are a lady, you can read.
Okay.
Only men who feel read for
Amber
this one.
Limited, a food packaging company, has operated as a private company for the past 10 years. The company has been growing rapidly over the last few years. The directors are now considering listing the company on the stock market. Preparatory to this, the directors are interested in determining a fair price per share for the company. Assume today is November 1st, 2016. The following information has been extracted from the most recent audited financial statement of Ambode Limited. Assume up to that. Okay, the following additional facts are available. The directors believe that the free cash flow to the equity model should provide appropriate valuation for the company's shares. An investment banker has provided the following estimate of cost of capital. The directors believe that the free cash flow to equity will grow by 18% for the next 5 years and by 5% thereafter. The company currently has 600 million shares in issue. Required: 1. Calculate the free cash flow available to the equity for the year ended October 31st. Use free cash flow to equity model to calculate the current value per share. What are the key advantages and disadvantages of stock exchange listing? That's all.
Oh, Jesus. Sorry. I've forgotten I've muted myself. A call came in. So I've forgotten I've muted myself. I can't ask on a question. I was first praying for the woman that read the question, that God will bless you. I should not answer me. I was already worried. So I've forgotten that I've muted myself. Anyways, thank you very much, Madam, that read the question. So please, what's the name of the company?
Ambode Limited, sir.
Body Limited. What do you say we should do? Calculate what's
Free cash flow to equity.
calculation of free. So please, in one of those classes, I've given his microphone, please. God. I've given what's the name? I've given out format for free cash flow to equity. So if you check, I think it's in the material. So check the material and let's check the format. So what's the format for free cash flow to equity, please? What do I start with? It's in that material. Check, go back to where the note, I think the end of the note. Well,
Profit before interest and tax, I guess.
my PBIT. What's my PBIT in that question? What's my earnings before interest and tax in that question?
1506.
Earnings before interest and tax.
1836.
6. Okay, this is the free cash flow to equity. So you deduct your interest. If it was free cash flow to firm, you would not deduct interest. Or are you guys listening? If it's free cash flow to firm, check the format now. There's no interest there, but free cash flow to equity, please. There's interest there. So you come here and you say interest expense. So how much was my interest in the question?
330.
830. So it gives me my profit after. Okay, gives me my profit. Gives me my profit before tax. So my PBT. So what do I have? 1.5 what?
06.
506. So I do my tax. What's my tax rate?
30%.
Look at the value of my tax in the question. What's the value?
452.
452.
So according to the format, what do I have next?
Non-cash item.
Okay. What are the non-cash items there?
Depreciation.
Depreciation,
So,
amortization, capital
so you add
allowance.
back. So you add back depreciation. You add back depreciation 440. Abi, how much is it?
It's 440, sir.
So if there was capital allowance, you add it back, but I don't think we have capital allowance in this question. So that format I gave you is very, very detailed. Just if I used to tell you, if it's cram it. Any more you want to know it, you will not see that format in exam. So if it's cram, you want to cram it. If it's no, you want to know it. But that format is how you know free cash flow to equity or free cash flow to firm, please. So according to the format, what do I have next?
Increase in working capital.
So, but the problem with working capital is you cannot say if it is an increase or it is an decrease until you go and calculate it. So you write changes in working capital. So you say working. It's just like your normal cash flow. Your normal that you've done in FR, you've done in CR. It's just like that. Your normal statement of cash flow is nothing different. So you come here, you say workings. You say workings. You will now say workings one. So say changes in working capital. So how many years do I have there? How many years do I have?
2,
So what are the years?
2015 and
2015 and 2016.
You say 2016 to 2015. You now come here, you now say changes. Eh? Put it back. Okay. Not the changes. So what are the working capital that I have in that question? Look at them. What are the items of working capital first? List them. Let me hear first.
receivables, inventory, and liabilities.
Yeah. Gamma,
Inventory, payable, and receivable.
tell me the 5 items of working capital. That's my question.
Inventory,
Mm-hmm.
receivables,
Mm-hmm.
payables,
Mm-hmm.
and short-term loan and cash.
We have
Cash is
accruals.
less than amount.
Accruals and prepayments.
Thank you very much. So those are the 5 items of working capital, ma. You said short-term loans. You mentioned payables now. Maybe your short-term loans that. So what we have is we have receivables, payables, inventory, accruals, and prepayment. Please, those are the major 5 items of working capital. So in this question, which ones do I have?
Cash.
I've not mentioned cash for you now.
You have account receivables, inventory,
So let's start
payables,
with
and short-term.
so you see account receivables. So for 2016, what do I have?
Is it receivables? 1072.
72.
In 2015, what do I have?
980.
50. So what is the difference?
92.
But the problem with changes in working capital is you cannot just write 92. That is, so you need to know if it is increasing or decreasing. So you know if it's a cash inflow or cash outflow. You should have taught you all those things in statement of cash flow in FR and in CR. So in 2015, the money you want to collect outside was 980. In 2015, what you wanted to collect from outside was 980. In 2016, what you now want to hey, somebody's unmuted. In 2016, what you now want to collect outside has now increased to 1,072. What has happened to your cash? Have you had cash inflow or have you had cash outflow?
Cash
Cash out. Cash out.
You have had cash outflow. It's cash outflow. Now, if you don't understand what I said, in 2015, money that you want, account means that money that somebody wants to pay you now. 2015, the money that somebody wants to pay you is 980. Then in 2016, it has increased to 1,000. If you don't understand, look at it from the other way. If this amount had reduced, say maybe this amount has reduced to 900, it means that people have paid you. So money had come in. I'm talking about the other way around. I mean, imagine this 2016 was 900. 2015 was now 980. So it means that the money that they want to pay you outside has reduced. It means that some people have paid you. So that would have been cash inflow. So the other way means cash outflow now. So what this means is you sold more to people on credit. Do I need to start removing people from my class? Somebody's unmuted and you're disturbing me. Even a lot. Jeremiah, please now. So as I was saying, where was I saying? So I was saying that, so what this means is you've sold more inventory out to have more receivables. So it's cash outflow. So you come here, you say negative, what is it? I think 92, what do you guys call it?
92.
negative 92.
So let's go to the next, inventories. inventories. So what do I have for my inventory 2016? What do I have for 2015? Yeah.
Inventory for 20
Okay,
2542.
2015, 2078. Then for 2016,
About
2
for
2542.
2016 what?
2542.
2542. 2015
2542. 2078.
2017.
2078.
So what's the difference?
464.
464. So now, before you decide if you are negative, Abi English, before you decide if you are subtracting it or you are adding it, look at it like this. Say your 2015 money was 2007-8. Now, in 2016, now it has now increased to 2,542. Is it a cash outflow? Is it a cash inflow?
Outflow.
Cash outflow.
No. You're buying more.
So you say negative. So it means that you have bought more inventory, more money has gone out. That's the meaning. So the last one. What's the last one? Think payables, Abi.
We have payables, sir.
Okay. 1 minute, please. 1 minute.
For
1 minute. 1 minute. Okay. So payables. Mm-hmm. What do I have?
3,084
3,084.
for 216, yes. For 215, 2,792.
3,084. Then this 2015 you said is what? 2,792. So what's the difference?
292.
292. So if you look at it like this, the money that you want to pay outside in 2015 is 2,792. Now it has now increased to 3,084. So it means that more people have borrowed you money. That's the meaning. You wanted to pay somebody 2,792 in 2015. 2016, you have now is now 3,084. It means that more money has entered for you now. You've collected more debt. So it's a cash inflow.
Inflow.
So you do like this. What's the total?
Negative 264.
Negative. Is the total? Total.
So we have short-term loans. Oh.
Now this short-term loans. It's a negative 264. Hold on, let me cancel this thing. The same reason why we would not use short-term loans is the same reason why we do not use cash now. Whenever you are calculating operating working capital, you don't involve short-term loans and cash. And this is an operating because you're trying to calculate. You don't use short-term loans and cash. We are calculating operating working capital. It's only if you are trying to calculate like the proper, how would I say it, if the normal working capital, that is your current asset minus your current liabilities, like in the proper financial statement. Then you can add short-term loans, you can add your cash. But you're trying to calculate operating working capital like this. You don't add short-term loans and you don't add cash. Thank you very much. So we have negative 264. So it means it's an increase in working capital. An increase in working capital means what? It means
An inflow.
our increase in working capital. So we'll subtract it now.
Yes.
The format.
Yes, sir.
I don't even care. As long as this is my answer. So what I'm just trying to do there is sometimes you guys might forget is it increase I'm supposed to add? Is it decrease? Which one is increase? Which one is decrease? All those grammar. Just know that's why I did this format. This changes. Once you've done this, it gives you negative. Go and put it there. If it gives you positive, go and add it. It's that simple. So that you will not be looking for increase. Is it increase I'm adding? Is it decrease? Hey, all those just like changes in working capital. I'll come and do this. If it gives you negative, go and subtract. If it gives you positive, go and add it. So that's that for that.
Thank you.
You're welcome. So what else do I have in the format?
Capital expenditure.
So you can say capital expenditure. So you come here another working. So you say workings too. That exam is really close. Really close. Because before I don't used to write all these workings, so I just used to solve. But now I'm feeling the pressure already too. So you now say purchase of new assets. So you say let's do a table. Do something like that. These tables have gotten bigger. So do something like this. So you see, you guys know the way we used to do that purchase of new assets in you would have skipped cash flow class, or you would have not like cash flow. This is going to be a problem. You can add the way we used to do our purchase of new assets. That will do previous year figure, add back depreciation, will now subtract current year. People that used to run away from FR or CR class, this is where the non-gamma happened. So you say non-current assets, you say 2016. What was the figure?
5942.
2016.
2016. 6224.
6224.
You add back your depreciation.
6224.
What's the value of depreciation?
440.
440. What do I have? I think I have
6664.
64. You're not going less non-current assets like for 2015.
722.
So you now say less non-current assets 2015. What do you call it?
5942.
942. So do I have?
722.
So you have 722. Call it for purchases. So this is our 722. Now let's take it to our stuff. Purchases of that's why I call it purchases of capital expenditure. We are spending money now, so money is going out. So it's an outflow. It is 722. What's there again in our format? What's there?
Payments, loan/debt repayments.
Yeah, we don't have anything like we don't have loans. Do we have additional loan in the question? Do we have short-term loans? We have all those loans, Abi. And do you have short-term loans in the question?
We have short-term loans, sir.
Okay, so you can come here and say additional loan, or I think it's loan debt repayment, something like that. Loan debt repayment. So you call it workings 3. So you come here, move this down a little. So you come here. So you say calculation of additional loan. So you do a table like this. This is something like this. Should have changed this and say 4. What are you doing now? Asal. Now. So yeah. Me and table. No, me and table the battle. So you come here, you say you have 2016, you have 2015, you have changes. So you come here, you say non-current liabilities. You have non-current liabilities in the question, yes. What's my
Yes,
non-current
please.
liabilities in 2016?
It's bond. 2016 is 2.4.
Bond is also a form of loan. So you come here and say 2.4. 2015, what do I have?
2.5.
2,500. Is this a cash inflow or cash outflow?
Outflow.
Inflow.
Inflow.
Cash.
As outflow.
Look at it very well.
It's
Outflow.
an outflow. They repaid 100. They repaid. It was higher in 2015. They repaid. So it's an outflow.
You're collecting more loan, so it's an inflow.
Good. Now let's look at it from your own perspective. In 2015, it was 2.5. In 2016, it's now 2.4. How are you collecting more loan? I'm just trying to get it from your perspective.
You repaid 100. It
No,
was
calm down,
reduced.
please. Thank you. So I said they collected more loan. Have you seen what we are trying to say? In 2015, it was 2,500, and in 2016, that's reduced to 2,500. There's no way you are collecting more loan now. If it had increased, it could have meant maybe you collected extra money now. But this one that has reduced, it means you have paid out of this 2,500, you have paid it to 2,400. So it means you have paid 100. So money has gone out of your pocket. So it's cash outflow. So I think we have short-term loans, like somebody said. So you come here, you say short-term loans. What do I have for 2016?
1936.
1936. What do I have for 2015?
1432.
143. So what's the difference?
504.
Now let's look at it together again. Is it cash inflow or cash outflow?
Outflow. Inflow.
Inflow.
You don't show outflow.
Inflow.
You don't show outflow. No. Please now, don't just. I know
Inflow.
the thing with you people, some of you is eye contact. You don't want to even reason it. You just want to, okay, this one is bigger than this one. It means it does not mean anything because anyone is bigger than anyone. Some of you say, okay, 2015 was this one. It means money. No, reason it now. 2015, your debt was this 1,532. In 2016, it's now 1,930. You collected more loan now. It's an inflow. Oh yeah, what's the difference, please? 404.
504.
Cannot be 5 now. So
Okay,
check.
sorry.
4.
Let's take
404.
our loans to this side. Like I told you, don't always. Why I'm using this changes format. If you check your Pathfinder, honestly, you will not see like this. It was not written like this. But why me I'm using this changes format is so you don't have to bother if you are subtracting it here or you are adding it. Now, if it has given us positive, carry it here and come and add it like that. If it has given us negative, come and subtract it. It's that easy. So what is my? So let me insert one more below. So you see my free cash flow to equity. There's nothing more in the format now. There's nothing with all these things. All these things are very simple, honestly. You are just scared. There's nothing SFM. the free cash flow to equity. What do I have? What do I have?
912. 912.
So my free cash flow to equity is 912. Now, so now the problem is this is the answer to that particular question. But in some other questions, they could have asked you if you're supposed to use this free cash flow to equity to do valuation of a business. Somebody is unmuted. Supposed to use this free cash flow to do valuation of a business. The next thing you do, just take this 912, bam, use it like you are using dividend valuation. So 912, so the formula is now free cash flow to equity, open bracket, 1 plus growth rate, close bracket, over cost of equity minus growth. That thing we use it for dividend valuation. It's the same thing. Just carry this free cash flow to equity, bam, do the 1 plus G over KE minus G. That's if you're asked to do the valuation, if you're supposed to use it to do valuation. But the problem is most times it's always you always discount your free cash flow to equity also, depending on the question. Anyways, depending on the question, I'm just trying to give you scenarios of what it could be. But according to this question, what were we asked to calculate? Just calculate free cash flow to equity. So I think that's why we have to stop there anyways, because we are just asked to calculate free cash flow to equity. If we're asked to use if we're asked to use it to value a company, sometimes if they are giving us maybe growth rate, the question could now come in a different ball game. So if they have given us a growth rate, so maybe free cash flow to equity grew by maybe 5% over the 2 years or 3 years. So we take this 912, we go to grow it. I'm just saying this for people that will not be in our revision class. I have a question like this that we grew it, which made better sense. But people that will not be there, that's why I'm saying all these things. So if we're asked to go, if in the question you have growth rate for free cash flow to equity, so what you would have just done, I think I have a question like that. Let me show you guys. I think it's the last question I wrote. Is it the last one? Okay, you should look at this question. You should look at this question. So it's a free cash flow to equity question also, but see what they now told you here. Where is it? All this one is for you to go all those ones. Now, see the growth of combined company. Okay, this is the growth of. Then it's supposed to go by 5 years after. Then to see where they said the free cash flow to equity grew by something percent. If I can. I'm not sure if not this question. Don't think it's this
I
question.
think it's the same question we are solving.
Yes, we have it on this particular question.
Okay, we have it on this question too.
Yes,
Okay.
please just scroll down. You see before the requirement, the growth rate.
I don't have the question anymore. That's the bad part.
Okay, the director believes that the free cash
I have it
flow
on my phone.
to equity will grow by 18% for the next 5 years and by 5% thereafter.
Good. Is that the B part?
No, it's not the B part actually.
Okay,
It's
still the A
before the
part.
requirements. It's before the requirements, sir.
Okay, before the requirement. What is the requirement B?
Use free cash flow to equity model to calculate the current value per share.
That's where we use the growth rate now. This one just asks us to calculate free cash flow to equity, so we cannot grow it. That's why it just asks us to calculate free cash flow to equity, so we cannot grow it. Now, but for the B part, if you want to calculate the value per share, what it means is if you want to calculate value per share, what would be the formula you will use? Let me ask you people. If you want to calculate value per share of something, what is the formula you will use?
Earnings per share.
Sir?
If you want to calculate value per share, it does not necessarily have to
You
be
need to get
now.
you need to get the value of somebody, then you divide it by the number of shares they have.
Now, you get the total value, then you divide it by the number of shares. But if you want to get the total value now they've said that this one that we've just gotten is just free cash flow to equity, not the total value. Now they've now said that it will now grow by 5 years and it will still go to perpetuity. That will now be so we'll now add the two together. That will now be our total value. So if they had asked us to use this for evaluation, that would have been the value that would have used. Hey, the question makes sense now. It makes sense. So that's our B part. So let's go to B now. So you now come here, you say B. All these ones are still working, so let me move all these working. You now come here, you now say B. So you say using free cash flow to equity to determine the value per share. So you come here, you say people see the way my work is very neat. Please, this is how your work should be. Oh. Please, your working should be your working. Then your solution should be your solution. Don't be merging things together. I beg. The only thing they want to see in this stuff, in this your free capital to equity, is this format. All this how you got your working capital. This should not be shown. It should be shown at the back, not the back of your book. Oh. Even know the way you are professional students, even know the way you move your workings to the back. So please, using free cash. So you come here, you now say current value per share is equal to what? So you say, you basically, I'm writing formula. Please, people are saying, I'm not doing. See, I've told you people before. I'm the one. I'm not supposed to be writing this formula because it stresses me. People see the yes, it has scatter again. See the problem I used to go through to write formulas, but I still used to try so that it has scatter. I have to go and start again. I'm using Word, so it has scatter. So I have to go and start and write it again. So I'm the one. I'm supposed to be skipping formulas, but I don't. I used to write so that you guys can see this is how your work is supposed to be. I beg. So you come here, you now say current. I'll be sorry, you're not current. You now say total value over number of ordinary shares. I don't know what happened to my all my property. I lost those materials. That's why the first one I said, I think people were not able to download it because I just forwarded it from the last time I sent it. So I think that's why people were not able to download it. I don't have the question again. Oh yeah. So you now come here now. So let's say so you now say, we are trying to do, so you first do year 1 to 5, you will now do year 6 to annuity or perpetuity or infinity. And not annuity, sorry, to infinity or perpetuity. So let's do our table first. So you come here. You say, what will you say? I already got distracted. Let's do 4. Let's do 2 by 4. These tables, I know that in exam, you might not even know how to write now. Just do, you don't necessarily need to draw a table, just do two space like this, put something in between once you are done your work. Because you people might not know the number of space now. So just do T table, T like this, bam. Do this one, put here. So once you are done, go and close the box. Once you are done, because you might not know the amount of box to put until you are done. Means because it's experience. That's what is making me. So you now come here, so you say present value. Say year 1 to 5. Next one, you say present value. So this one, you say present value year what now? Year 6 to infinity. Now this is a problem. How I could find symbol of infinity like this? I just write infinity, JJ. Let me see if I can find it first. I have it. Nice. To infinity. Good. So let's go and start our work. So let's go to our workings. Say working. This one is our workings. Can you imagine?
4.
So you'll be workings 4. You see workings 4. So you now come here. You say 4. Bam. You say calculation calculation of present value of future cash flows from year 1 to 5. Now, so there's our table, year 1 to 5, so that should be 6. If I have growth rates, incremental cash flow, discount rate, my present value, that should be about, let me do 5 by 5 or 6 by 5. 6 by 5. So we have here 1, 2, 3, 4, 5. So I have my free cash flow to equity. What was that my free cash flow to equity again? What was the figure?
912.
912, 912, 912, 912, 912. So what's my growth rate?
18%.
So you come here, sorry, let me do something. No, now. So you come here, since we are going by 18%, so you say 1.18 is power 1. Come here again. 1.18 is power 2. I'm expecting you guys to be putting my answers down already. When I'm done, you just give it to me. 1.18 is power 2. 1.18 is power 3. 1.18 is power 4. 1.18 is power what? Is power 5. Yeah, year 5, what do I have? For my incremental cash flow. 0 what?
Year 1 is 1,076.
Get quorum, please.
1,000 what?
76.
Yeah.
1,270.
1,270.
Yeah, 31498.
1768.
1768.
So my discount factor, what's my discount factor?
That should be 15.
Please, in some question, they might give you WACC and they might give you cost of equity. Don't discount your free cash flow to equity with WACC. Oh. Are you listening? Don't discount your free cash flow to equity with WACC. Always discount your free cash flow to equity with your cost of equity. It's free cash flow to FEB that you can delete with, that you can discount with WACC. This is what I mean. Yeah, what's my discount factor? Yeah, one.
0.870.
2.
0.756.
3.
0.6.
0. What?
656.
0.756.
Is it
656.
yeah, 4?
0.572.
5.
0.497.
0.497.
So what my present value?
Yeah, 5. 1037.
1037.
Year 1, 936.
936 or 26? Is it 26 or 36?
36.
Yeah, 4.
Hmm.
1011.
1.
960 for year 2.
Year 2, 960.
960.
Year 3, 986.
960. You come here, so you say total present value year 1 to 5. Equal to what?
4930.
19.
4930.
4932. We'll bring this figure here. This is my total last one. So you come here 4930. 4930. We're going to do the second one. So our full cash flow to perpetuity. So you come here. Now say calculation. That's working 5, Abby. Somebody is beside one, and you have this element. So you say, please hold on with the questions, please. I will take them later. So take the calculation of present value to perpetuity. Abby. So you see here, so you see PV. There's Champions League tomorrow. Oh, you cannot relate. Yeah, I know some of you will still go and watch it. Should be easy, people.
We can relate.
I know some of you will still go and watch it. Better face your book. Okay. I'll go and watch Champions League like that. 2 hours. People don't. You don't have that luxury of time. But me, I do. Go and watch Arsenal's downfall tomorrow. You can't define self again.
No luxury. We are having class tomorrow.
You and who get class tomorrow? Asao now.
You are the 220.
They even want to use class to kill me. You don't want me to rest. Don't have class with you people tomorrow. I ain't get class tomorrow. Today is our last class time. It's the last time you are hearing my voice. Till exam day. I did used to hear my voice in the exam. That's what my last set of students said. Sure. I don't know if people used to hear it. But said they were hearing my voice in the exam. Base year. What was that perpetuity formula again? Free cash flow base year. I think 1 plus G. 1 plus G. Am I correct like this?
Cost of
Minus G.
equity minus G.
You say times discount factor of. The first time I saw this formula in my life, I say, which kind of problem is this? Say, which thing be this one again? It was until I now qualified and I looked at this thing again. It makes sense. It makes sense. But the first time, I say, which thing be this? How person wanted to know this formula? And if you now read some textbooks, God of mercy, some textbooks are so, don't let me talk because they're my organs. They are so non-nice that this formula, they will not write it abstractly. You could just, they will just do mago. You will just be seeing figure everywhere. See, here is this one coming. I stopped reading some textbook. I just stick to one textbook at one point. I stopped reading different. I'm talking about after I qualified now. I stopped looking at different textbook at. I just stick to one. I beg. You will see some like these figures everywhere. You'll be wondering, where is this one coming from again? What's our free cash flow to equity of base year? What base year means is the last year, like this current year that we are in.
2086.
Thank you very much. That's anytime you hear base year, just look at last year majorly. Last year, which is our year 5, please. Just look at the last year. So he's asking us for the free cash flow to equity You know, don't pick this present value. Please don't pick this present value. Just pick the incremental, the cash flow before you discounted it. That's your free cash flow of base year, not present value. Are you listening? It's not present value, it is free cash flow that is in the formula. See, it's free cash flow to equity of base year. So this is it. A jaw. So you say 2086. What's our good rate to perpetuity?
5%.
0.25. What's our discount factor of base year? Hmm?
0.497.
0.497.
I've told you anything base year, just look at year 5. Year 5 is base year. So discount factor of base, that's 0.497. It's 0.497. What's our cost of equity? I think 15%. I don't know.
15%.
0.15. Our good is 0.05. What do I have?
You have 10,886.
10,086. So let me take. So this would
Right,
have been.
0.5.
Sorry. So if you were asked to calculate maybe value of company sometimes, and he has to calculate it. Please don't get these questions wrong. What we calculated in the first instance was just free cash flow to equity. It's the question that told us to do it. If the question did not say calculate free cash flow to equity abstractly, this would have meant nothing. All these things that we've done, it would have been part of workings. Yes, now, if the question asks us to calculate the total market value of maybe Ambody Limited, if that was the question, this would have been workings. So we would have just done all this to get this 912. We'll now bring this 912 here. Bam, grow it to get this. He has perpetuity to grow it to get this. This plus this is what gives us the total market value. Please, it will give us the total value of Ambody Limited. So if the question was just calculate value of Ambody Limited, just don't do that. That first one you did, it will be part of your workings. So do all this, get this figure, do all of this, get this figure, take the two of them, go add it together. That's your total value of what? Of Ambody Limited. So if you come here, you put this here, I think 10 what? 886. 886. That figure is wrong, it's on you people. So I don't forget what's in there. So what do I have? What do I have?
15,816.
So let's bring it here again. So you come here. So our total value is 15,816. 15,816. What's our number of ordinary shares?
600 million.
600 million. What do I have?
26.36.
26.36.
So it means you have 26.36 per share. Do you have requirements? What's the requirements?
Advantages and disadvantages of stock exchange listing.
Yeah, push away. That one is remaining in your hand. Go and do that one by yourself. I don't try. Just put it on the way it is like. Just put it on Google. I'm sure you get your answer. And write it in your notes. So that this is basically what the question asks us to do, and this is basically all about free cash flow to equity. It's just this format. That's just the problem. It's just this format. If you know this format, if it's free cash flow to firm, it's different. There's no interest there. PBT, do this one, do this one, do this one. do this one, get your free cash flow to firm. So once you get your free cash flow to firm, once you get to this place, you grow it. Once you grow it, you get your incremental cash flow. But when you get there, you will not discount to your cost of equity, you discount to a WACC. You get your present value, bam, this, you go and do your free cash flow to perpetuity, same thing. You get your this thing, this one, you take the two of them, you go and add it together. Low baton. Please, do you have any question? Please ask me. Let me take questions. I said I was going to leave here by 10. This 10:30.
So
Sadiq, please.
on good evening, sir. Can you hear me?
I can hear you.
Please, can you go back to that workings 5, please? This okay. I think I get it. I get it now. All right, thank you very much. The FCFE group. All right, thank you.
Thank you. Mr. Sadiq, talk to me, please.
Sorry, good evening, sir.
Good evening.
My question is, I tried using annuity method since we have a constant free cash flow, but it didn't work. That means
It
you
will not
can't.
work now. What do you we don't even have a constant cash flow. The cash flow stop being constant at this point. If you use annuity for this one, it will not give you this now because you know we grew them first. We grew these people. There's a formula you can use, but I will not give you. If you have read your pattern, you will see this formula. The formula is very complex, so you don't worry. So the formula combines you growing it and you using annuity. It's just a formula. It's still the same thing they are saying. Even though that thing that we're doing with bond valuation and that we're using that table instead of using it's just the same thing. So they just created a formula of you growing it and you discounting it at the same point. But that thing you did, sir, I will not give you this answer because you know we will grew them first. And the moment you grew them, this cash flow stopped becoming a constant cash flow from this point. That's why annuity will work.
Is it like the approximation?
Hmm?
Is it like the approximation method?
What was that?
You said that the table for bond you are referring to.
Is it what did you call it?
Like approximation method of IRR.
Yeah, there's IRR and there's a particular table. People that were in my bond valuation class, I'm sure you guys know what I'm talking about. There's a table now. If you have different yield curve, that thing that you do cash flow over 1 plus R raised power 1 plus cash flow of year 2 over 1 plus R raised power 2. Yeah. Do you guys remember?
Yes, sir, we remember.
Yes, sir.
Me na no fear me. Oh. My mind don't face cut. So like it's just something like that. So they just combine the formula. You know that thing too is basically still doing normal MPV. But the only difference is the R just kept on changing. Yes, now because in the last year you are doing cash flow, it's still basically doing MP. So that's just the formula they gave for this one. If you check your Pathfinder very well, that's why I always tell students, people that like to read Pathfinder, you're on your own. Because at some point, what they do in Pathfinder, you don't understand it. Even if you read the solution from now till next year, you will not get it. Because it's people with advanced knowledge that solve those questions. So they just solve the based on they suppose know I'm not, they suppose know I'm. And students have not gotten to that level. I'm just learning this thing for the first time. I cannot expect them to know these things. So there's a formula, it's just a formula they did. So what they did was they kept this, I think it might just be the person that just generated the formula. The person will just do free cash flow to equity, maybe raise power minus and do 1 plus G, now do multiplied by will now do discounting. So 1 plus R, it's just a whole lot of deep jabba. And you'll be like, putting with this, do I have to cram this? It's still this old bush story. It's still this old thing that they are doing with that formula thing that they wrote. So that's why I always say understand the basics. There are simpler approaches to this thing. Understand the basics of what you are trying to do. Then I think you'll be fine. I think I have one more question. Mr. Audu, please talk to me, please.
Yes, thank you, sir. Mine is just on the interest. The interest we used. I thought it should be post-tax interest that we ought to use. I don't know why we use the gross amount.
So the thing is, what I always tell people, legitly or generally, is with SFM, what they have given to you in the question is very rare. Don't, how would I say it? It would not confuse you like this. Don't change it. Let me say it like that. If it has been given to you in the question, don't assume or don't change it. If you for no reason change it, go and write your assumption down there. What I'm saying is this interest expense was given to you in that your format. It was given to you in that question now. So you cannot say you are assuming that it's post-tax. Most question where you assume is, or where you say it's post-tax, is where it's not given to you at all. So you just take it, then you just say, okay, oh, since you are the one that you are bringing it ahead, then it's post-tax. Well, it was abstractly given to you. Okay, let me now ask you a question. This question now, it's been interest expense. Did it tell you maybe it's pre-tax or post-tax? There's nowhere there that is stated like that. Either it's pre-tax or it's post-tax. So it's always to be on the safer side, use it. But if you're for people that used to watch Disney's comedy, I don't know, these days I've been a fan. Village people like to do all this village people comedy. For people that you are like that they have now said, okay, use it post-tax, and you have successfully decided to use it post-tax, go and write it under. Say assumption. It was assumed by me, not right by me, but it was assumed that the interest expense is post-tax. Examiner understands. Yes, they are human beings. There is no computer. It's when I can start marking with computer that we have problem. Because all those assumptions now become a problem. But as long as it's still human being that is still marking, they will understand that, okay, oh, there's still self-preference or self-assumptions to some of these things. So if you had assumed it, I would have assumed that you write your assumptions down there. But anything that they've given to you that you're supposed to use and is in the question, please be very careful before you change it, before you set questions for yourself. Thank you. Is there any other question regarding this? Mr. Audu, are you fine?
Yes, I'm fine. Thank you.
Welcome. Please have any other question, please? Okay. So it means that we understand this very clearly. Oh, that's fine. That's so now. Please and please. What I would want you to do, you've learned it, but you have not mastered it. You can only master it when you start. So business valuation, I say it and I say it every time. That's why I can't use it as number one. That is just why. Because it can come in 3 million ways. It can come in, that's just the sad truth. It can come in any ways, and they can easily integrate anything. It's very, very open, very dynamic. They can integrate anything. That's why they used to put it in number one. You know that cost of equity that we use, they gave us now. Imagine a situation where they did not give us. They told us go and calculate it in B parts to go and calculate it. You calculating it now, they not give you a cost of debt. They go and put bond valuation there. You go and do it to get cost of debt. To now go and, I'm just saying it's cost of equity. Yes, you don't need cost of debt. I know. People should don't worry. I know what I'm saying. It's not for me to be teaching you, it's not rocket science. I know what I'm saying. If they give you, I know it's cost of equity that you use to discount your free cash flow, so you might not need cost of debt. But imagine situation where maybe it's free cash flow to firm that you need to discount with your work. You're not going to need to get your cost of debt. By that, it's bond valuation. So what I'm saying is very open, very, very open. So it can come in any way, but believe me, it's still the same end product. It's still, if you follow this, all the steps I've taught you, believe me, you will not have a problem. I'm not even lying to you. I feel like just these 3 classes I've taught you business valuation, I've simplified it. If you want to know that I've simplified it for you, go and take question and attempt it. Go and take any question and attempt it. There's a question in the Pathfinder. I don't know what year it is, but I think I have it part of. So I'll allow you guys to screenshot it, so that it's in the Pathfinder anyways. Screenshot it and attempt it. I think it's the first question I want to solve in our revision class. So even for people that are not going to be there, just attempt it. So you see that business valuation is actually quite not a lot like people used to say. Coming up. This one is, which one is this one? I think this one is forecasting. This is business valuation, but this one has to do with convertible debt. I think so, Abby. Cannot remember. But these questions are very, very thick. Okay, this is a free cash flow to equity question. Okay, this is one I was trying to look for that time. Okay, it's expected to go. Okay, this one I was trying to look for that time. But this is not the one I'm looking for. I want you guys to try. Which is this? This one is a little easy, Sha. This one is a little easy, but there are some complications there. Okay, this one I want you guys to try. So you can screenshot it if you want. This is the question one. So screenshot it. It's in the pattern. I'm sure most of you might have seen it. But if you haven't, please screenshot it. Let me cancel this navigation. Just lay your hands on it, please. So I'm hoping anybody wants to screenshot has screenshotted this part. 1, 2, 3, 4, 5. 5 seconds is enough for screenshots. I don't know the year that it is. I know some of you will still ask me. Like, honestly, it's not wickedness. I honestly do not know. It's not my fault. So I'm hoping this has been screenshotted too. I cannot be cramming. I can't pass question years again now. Those time has gone. So I'm hoping this has been screenshotted too. Can screenshot the requirement. I'm hoping this has been screenshotted too. This is the first question I will be solving anyways. So you can attempt it. Now, what I'm trying to say is, what I'm trying to allow you to do this is just know that these things are not they are not particularly, how would I say it? They are not particularly hard. Just understand the format and understand what's the name, the material I gave earlier, like that first class where I did the introduction. Do you guys remember where I did the introduction, where I gave some formula, say you are calculating maximum price, calculating synergy, all those things I've told you in those classes. Please and please, just try to get those things. If you have gotten them, then use that format. Say, okay, we'll come, say, what's the name? Say, maybe it's for combined companies, the hair is for this one. Just use the exact same format to get it. There's this thing Mr. Kabil sent to the platform yesterday. I heard it has been people are very funny in this Apex group chat. I heard it has been deleted. He sent a Google Drive of the past question. But you know, if you don't know how to use computer, if you don't know how to use laptop, it's a problem. So the thing is, if somebody moves that thing or deletes it, it deletes for everybody. So the moment he sent it, people were opening it, and because we were on a call together, then students were calling and sending him text that the thing is empty. I just did laugh. He was asking me what happened. Somebody has moved it. The person know that if you move it, you move it for everybody. It's just for you to view and open and download. It's not move. Somebody moved your entire thing and it deleted it for everybody. Like everybody from foundation to final. I just did laugh. So people are very funny. So he sent where I'm going to send that what's the name, past question guide. So take those past question guide, go to the years in the pathfinder. If it's free cash flow to equity you want to check, is listed there. If it's free cash flow to firm, is listed there. Anyone, if it is anyone is listed there. So please and please and please. I think somebody already dropped the year of the question on the group chat. So please try as much as possible to practice, please. Normally, as I'm free like this, I'm supposed to now be allowing you guys to be shooting questions at me. Yes, but this revision has really taken my time. See, I'm seeing question 7, and I'm targeting 20 questions. This thing is not easy. Before I go to ICANN, if it's ACCA, if it's textbook, I will cross-check the topic and I'll start typing it out one by one. So it's not particularly easy for me. So this question 7, I'm going to question 20. And this is not like my regular, you can understand, there's still normal work there. And I still have crazy lots of deliverables here and there. So, but you can still ask me questions, though. You can. I will try as much as possible. But like, let me tell you something. To make the questions easier for you and me, don't send me solution. Yes, now these people are very fond of. Some of you will send me solution. They ask me what. I actually appreciate the way you guys are saying me. People are saying me like maybe Albert Einstein, or like some people send me question and you'll be asking me question you send me solution. You'll be asking me question on the solution you sent to me. How am I supposed to know the question? How am I supposed to know what happened there? So yeah, until I see question now. So please always send me the question and the solution, even if it's my part. Those things I don't know the questions, so just send me the question and the solution, so I can easily look at it, and it's easier for me to answer. Okay, what happened there? What happened there? Okay, and I can easily give you a solution to your to the issues that you have. So please, you can ask me questions this period. I'll gladly answer you. And what else? What else? What else? For my end, I think I'm very, very okay with this diet. I know that we did not, how would I say it? It was not intense like it should be, but I think I'm confident. I think I am. Are you? I think I'm very confident. I just need you guys to calm down. Don't panic. Just take your past questions and start solving. Go back to the basics of where we started from. Those are our YouTube videos. Go and watch them again. They are not living. Nobody's deleting them. Go and start watching them again, then start solving questions. This is not a period where you should start reading. I'm not joking. No, this is not a period where you say, hey, where do I start reading from? No, this is not a period. This is a period where you start solving questions. Honestly, that is why, check, there is no one single explanation in this revision question. See, it's just disclaimer, topics to be treated, and question. Abana, I've been shouting and be explaining since January. But then I come and still be explaining me. No, now. So this is not a period where you need to start learning. It's just a period where you need to start practicing what you've learned and start solving questions on what you've learned. But if you have not still started reading, I don't know, maybe you are a genius. Anyways, for my hand and my co-SFM lecturers, we thank you guys very much for being a part of this beautiful journey. For being a part of this amazing journey. It was nice being here. It was nice lecturing you. The next thing I want to see now is when result drops. People should tag, and I want to see the beautiful comment and the beautiful part. Some of you will still see me. Don't worry. And I've already marked some of his faces. I think some of you will still see me there. But anyways, for the people that okay, you don't ask how to recognize. Okay, but I've explained now. I've explained. So for people that would not be there, thank you guys very, very much. I know that maybe due to one or two issues in classes, it can be intense sometimes. Now it can be intense sometimes. I might have said some things that maybe you don't like, or you feel like, hey, forgive me. I'm just a child. I beg, I'm just a baby. So please forgive me. And also there are classes where there are mistakes here and there. We had to correct the mistake, like this one we just corrected now. There are just mistakes here and there. I'm not a genius. I'm not father of SFM. I think Mr. Molenwa is the father of SFM. I'm not saying, I'm like, that's the name. I think that's who they used to call father of SFM. So, and I have big bosses here and there. Mr. Molenwa, Mr. Dijuwon, Mr. What's this man's name? I used to forget again. Oh, God of mercy. So Sanusi, those are my bosses. They're my father in the game. So anyways, we keep making mistakes till we learn from them anyways. So I'm sorry for those two. And lastly, very sorry for the inconsistent classes. It's not been easy. On my part particularly, it's not been easy. This is the second time or third time I'm covering almost all SFM. And it's not always very easy. So enough of my motivational speeches. Don't forget your theory. Like, it came to my head again. I decided to share it again. Don't forget your theories. If I were you, go to that Apex, what's the name? Past question guide. You see theoretical aspect. Be picking them out one by one. Be writing it if it's in your notes, or you people that use Jota, people like me, be writing it out in Jota. Be writing it out, all of them. Now start loading them in your head. Believe me, you see, if you don't see that one exactly, you will see the ones that look like it. If you've not read that one, all the topics they have theoretical, not all, but most of the topics, they have theoretical part attached to it. Business valuation as measures and acquisition, bond valuation. We had what's the name there? We had definition of all these things. Yield to maturity. What's the name now? Duration. Most of them they have linkages. Option pricing too. They have some of all those things, how they link together. Look how, go and read it. After that one, I go and read the main theory all those capital restructuring, dividend policy, and all those things. And check your syllabus. The topics we did not do, I think there are about one or two topics that we did not do. So please go and read them on your own. I don't think anybody completes I can syllabus. I'm just saying. I think we did good over 80% or 90%. I think it's just one that I can remember from my head. Buy or sell. There's that topic. I think buy or sell or buy. Then is in. It's called specific investment decisions. Abi, no, I don't forget.
Really go buy.
Lease or buy, all those things. I don't like that topic because it does not need to come out. But please go and read them. I think that one and which other one we didn't do forecasting, but I have a question in this my bank that is on it has on forecasting. What else didn't we do? I'm just listening to all these topics so that you guys can cover them so that at least you're on the safer side. I think that's all. Please, I saw a question when I was running to your question to your Pathfinder. If you check my option pricing material, there's a part there that spoke about intrinsic value. Please look at it. That spoke about intrinsic value. It's just simple calculation. That one is not. You don't need the teacher to explain it to you. Please, option pricing. I don't know. I forgot. I don't know. I forgot that part. Maybe because I was intrinsic value. I've seen the life pass question on it, and it's very, very easy. But I know that students that they did not teach my most likely not get it. Intrinsic value is simple. It's in that my option pricing material, and it's in the question. It's in your icon pattern. I don't know. I cannot even remember the year I saw it. I was just scrolling through, then I saw it. So please read that also. What else did we talk about? I don't know. I think that's all for me. If you guys remember any. On that note, I think I can sign out now. Does anybody want to tell me anything, any recommendation, any suggestion, any conclusion, any observation, anything I need to improve on? Am I a bad lecturer? Tell me. Let me go and work on myself. For improvement. That is oh yeah, I'm listening. Mr. Benjamin, talk to me, please.
Hello, good evening, sir. Thank you very, very much. Really appreciate all you did. Thank you for the sacrifices. Thank you for everything. Words cannot thank you enough. We pray God continue to bless and increase you in all your endeavors. Amen.
Amen.
So please, I just want to get one clarification on something. I was going through. Can you hear me, sir?
Yes, I can.
Okay. So I just want to get some clarification about these terms in the money, at the money, and out of the money in relation to option pricing. So I don't know if there's a way you can maybe explain it in layman terms for me, please.
I feel like what is there is, I think what is in the material is in layman terms though, because there's one I think is when we have this thing now. Oh God of mercy, what's the name of this thing? Oh Jesus, PA and PE. It's just a relationship between your PA and PE. When one is greater than one is less than one, then one is equal to one. It's just basically that. Once your PA is the value of the underlying. Once it's greater than the exercise price, I don't exactly remember which is it. Maybe it's in the money, a bit out of the money. But it's just you don't need. How would I say it? It's just like I know you are trying to link it to what we are trying to do. That okay, why is it there? Why is there moneyness of an option, Mr. Benjamin? Don't look for why. Qualify first. As it is like that, if it is that, cram it, put it in your head, carry it to the exam. When you are done, go and be looking. If that's the way it's in syllabus, I don't think I know how to link it to the option. Why is it there? I don't know. That's the syllabus they told us to teach, and that is what we are. That's what is in their pack, and that is what we are teaching. So why it is there? Why didn't they put it in bond valuation? Why I honestly cannot say. But it's a relationship between your asset, is a relationship between your value of the underlying and your exercise price. That's just all I know I can tell you. But one is one is greater than one, then one is less than one, then one is equal to one.
All right, thank you, sir.
You're very welcome, sir. I mean, please talk to me. Oh, yeah.
Hello, good evening, sir.
Good evening, sir.
Sir, you did a very good job. I so much enjoyed the class. My own is just to pray for you. May God bless you. May God answer all your best wishes, all your best, your good prayers, sir.
Amen. No. Amen. Thank you very much, sir. Thank you. Thank you. I need prayers, though. I need prayers. Mr. Audu, oh, yeah. Mr. Audu Francis, want to tell me something? Yeah, I need to run now. Mr. Audu, are you there? Your mic is muted. Your child is texting me. Okay. It was a mistake. Anyways, with all this being said, it's in a privilege. It's you people that is me. I'm privileged to be tutoring you people. Eh, you want to learn Yoruba? This means good. When we started class by January, you did not come and learn Yoruba then. No. Now when we dey finish, now you won't come learn Yoruba. Yeah, come to my DM. Let's do business. Come and send money to my do transfer. So I will teach you. You will learn everything about Yoruba, everything you need to know, so that you go to heaven. You people have forgotten that Yoruba is the language of God. That language they will use to judge us on Judgment Day. Hmm. I know you shame me. Yeah. Anyways, thank you guys very much for listening to me. If you are for the vision class, I will see you in there. If you are not, I wish you all the best in your exams. I'm still always here for you to ask me questions or anything. Don't call me too much. Just ask me questions. Mr. Osman, oh yeah, oh yeah, oh yeah, oh yeah, oh yeah.
Sorry, good evening, sir.
Good evening.
Thank you very much for taking much of your precious time to tutor us on this SFM. I really want to appreciate you more because uh, I've come from a far journey on this icon. There's not much time now. I just want to the way you have been gingering us to study because past mistakes. I'll just be doing eye reading, just the way I'll be saying. When you're solving question, I'll be looking at it. I know how you derive all those things. So I just assume that I know it. I won't bother to go over it and practice. So at the end of the day, you want to go to exam hall. Maybe that's when you start. You want to go and start writing inside the exam. So definitely your performance will be very bad. So that was the experience as well. So when you started uh, talking about us not be doing high reading, you should be practicing because if you don't practice, you won't be able to get SFM. I started this journey in 2010. So when I started that 2010, the problem I was having was that when this PM, that and they are calling management accounting. So I passed all other course subjects. So it remained this management accounting was giving me headache up to 2014 when they now changed the syllabus. So when they changed the syllabus, they now instead of one course that I was having, they now dropped three courses for me again. That was PM, PSAF, and this ethics. So I became discouraged and I left for masters at ABU's area. So I didn't attend the exams again. I didn't make any attempt again for over up to 8 years. So I just came back about 2 years, and so I started again. I now passed. I started again. I passed PSAF in the first diet. So in November diet, I now passed the PM and ethics. So that's why I was now qualified to professional. So instead of me to put much effort again, I became relaxed. I was just doing all this high reading. I said, okay, maybe it's all this fast approach to exams that I can easily just tackle it since I've passed my distance. So that's how I became. I don't know, due to my nature of job, I'm seriously engaged in the office. But coupled with family problems and what have you. So I have not been. I didn't sit up very well for the first May diet. I just pack all the subjects, 4 subjects, since I was giving credit in AAA. So still I didn't put much effort. So I couldn't make any of the papers. So this was very poor. Mm. So but when a personal linked me with this your Apex, a friend introduced me. So when I started attending this your lecture, I now start having much confidence in A7 that is doable. It's something that I can do. So I just really want to appreciate your efforts for at least making us to wake up. I don't do I reading. Go and practice. Go and practice. So I just want to appreciate you. Sorry for taking your time. I just want to let you
No
know how
problem.
far. So I pray that God will grant your own good heart desires. And I want to
Amen.
that all of us next time when we are meeting just to tag you and that will pass our SFM. Thank you so much.
Mhm.
God bless you and your family. Thank you.
Thank you very much, sir. Thank you very much. So, real quick, based on what Mr. Usman said, let me pass an information that you guys did not pay for. So there's another section of Apex that you know that I used to give people hot gist as the hot. So there's another section of Apex that we are working on now that I think I want to call it Untold Stories. Mr. Osman, please your mic. I want to call it Untold Stories, where we talk to people, not like where we generally talk to people on their icon journey. Why do we want to do this? We want to do this because we feel like you guys said, experience is the best teacher. We are trying to allow people that are coming to learn from mistakes that people have made, or to, I don't know, people when they join this icon journey, they always feel like maybe school exam, or they always feel like they feel so relaxed. They don't always, how would I say, they don't always see the need to begin or to start strong. So, but like watching people's experience, if you hear that somebody has failed PM 10 times, there's no way you reach there and you sleep. You say, 10 times, care. You will put energy. But hearing all those stories could, I don't know, just that little story could change your approach to a lot of things. So we are trying to people that are so far apart. Maybe we look for a way where you just maybe you write your story, then we look for a way to publish it or maybe upload it or something. So that's a part. For people that are so close to maybe Lagos, Ibadan, Shigo, we are planning a physical interview. We have a team that will do all those things. I plan a physical interview, but people that are so far away, just look for a platform where you just write your stories. You write your stories for us, then we upload it. So that's another dynamics of Apex that we're planning to work with now, just for one or two more people to learn from. I think it's a good approach, anyways. So please, when you qualify, or I'm sure after the exam, the announcements will be made. If you are interested, the number you reach out to, and they put you through how to write your stories, then we'll put it out there. Then everybody gets to see it. So that's that for that. Anyways, time is fast spent. My battery is low. I plan to use 1 hour. I don't use 2 hours. But anyways, thank you guys very much, and have a wonderful week ahead and a wonderful night. And I will see some of you on the other side. For the ones I will not see on the other side, I wish you all the best in your exam. I will also post, don't let me promise, but don't worry, any other information will be passed, will be sent to the group chat, or be posted on the YouTube. Please, this period is where you be consistent on the YouTube. Some things will be posted. I'm sure you would have one or two things to learn from it. On that note, thank you guys very, very much, and have a wonderful night, have a wonderful week. Best of luck in your exam. Good night, everyone.
Good night, sir.
Good night, sir. Thank you.
Right,
You're
sir.
welcome.
Thank you, sir.
Yes, sir. Thank you
Good
so
night.
much.
God bless you. Thank
Good
you so
night,
much.
sir.
You're
Good night, sir.
Good night, sir. Thank you, sir.
welcome.
Good night, sir. Thank you so much.
Miss Nkechi.
Sir.